And where you're at, this is Mike Wade coming to you live from Ciudad Colon, Costa Rica. It's about 20 minutes outside of San Jose. As you know, last week I had some internet problems. A tree fell, hit the lines. I lost electricity in both Ethernet lines or internet lines. But I'm here today. I've got great internet. Apologies for that, but we're in good shape for today. We had a big event yesterday. You probably heard about it, the Fed announcement. We'll talk about that here in a minute. We had a trade on Love last week that did not fill. And then I've got, there's so many trades for today. I've got one I like, but there's plenty of others. If you have one that you like, please pop it down below in the chat box. And we'll get through the first trade that I have for today. And then we will take a look at your stocks. And maybe we'll get two on today if time permits. We're also going to give you the Sniper Guidebook giveaway. That's a free book that walks you through this process, so that you can join me every Thursday at 9:15 Eastern Time and trade alongside with me. Ryan, our win rate, a win streak is 14.
Not too shabby.
Yeah. It starts to, when baseball pitchers have win streaks or hit streaks or, people start talking about them, and, there's the idea that that's a jinx, but man, the system operates at a 90% win rate typically. We're at a 100% win rate over the last 14. So that's the kind of performance we get here. We're not looking for triples and doubles and even 50%. We're looking for small wins, like 10, 15% wins. And we get those wins every 7 days on average. So the average over the last 2 years has been 90% wins and 10% every 7 days. And imagine doing that every week. Take the same money, you're in, you're out in 7 days, you're in, you're out in 7 days. Those 10% get on base trades really add up over time. All right, so that's the setup for today. We're going to talk about Powell now. I'll pull up. We have a graphic first, but Powell. Oh man, it's always a challenge sometimes. Well, first off, let's say that Powell has one of the toughest jobs on the planet. I feel for him. I think he's got a lot of grace and integrity, and I really appreciate the work he does. But we were looking for a couple of pieces of news. One of them was, are you guys going to hike rates? Why would we hike rates? Well, the job market is strong. Our earnings are good. The market's running up. That's like a well-functioning economy, but not when inflation is high. So inflation has not ticked down. About 2 weeks ago, Michelle Bauman came out and said, hey, I think maybe we need a rate hike. And then that tanked the markets. And then Powell took that off the table. He said, rate hikes unlikely, quotation marks, subject to changing over the economic conditions as the reports come out. That may not be out of the realm of possibility, but most likely it is. And he said nothing about rate cuts. That's what the market wants. Are we going to get rate cuts? Eventually, yes. Will it be this year? Maybe. Will it be 2025? Maybe. So the rate cut picture is unclear. And I'm going to show you a chart of the S&P 500. I'm using a different piece of software. I had trouble with logging in on the other software, but this is the S&P 500. And you can see right before the Fed announcement, this was Tuesday. And then yesterday, we got this pretty wild action here. Let me show you what actually happened. I'm going to pull up a chart, a 5-minute chart, and you can kind of see the timing. When Powell started speaking at 2:30, the market started rising. When he said, no rate hikes are happening, and the market says, woohoo, the market runs up. And then the market said, well, now what? And then we had a sharp correction right into the close. And right now, if I take a look at the futures, we're going to go right over here to CNBC, and you can see the futures are up. The Dow is up 0.45%, the S&P 500 0.63%, NASDAQ up 0.74%. So we're going to get some level of a bounce at the open. So that's the general feel. Now, I think perhaps from here we get some bullishness, but I don't know. Honestly, it's really hard to know where we're going next until the Fed comes out and gets more dovish on rate cuts, which he wasn't yesterday, really. the markets could be, volatile. They're going to go where they're going to go. And guess what? We don't really care so much because we're opportunistic traders. We come in and snipe profits at a relatively safe distance. In fact, let me show you our performance that we've been running this 14% win streak. And you can see here, we're doing really, really well. We're averaging 14.93% on every single trade. That's with losers. There's no losers, 100% winners. So we're averaging 14.93% over a 5-day hold time, which is freaking phenomenal. So if you want some of this, join me on Thursdays at 9:15. Grab the guidebook down below. This is a snipers. I call this system the snipers. And really, I wanted to give you a roadmap, a 5-step process on how to find stocks, how to determine where to place your lines in the sand, how to build a credit spread. It's the next level of options trading. It's a spread, and we sell the spreads for a credit. We buy them back for less than we sell them for, nabbing, in our case, 14.93% every time on average. And then how to manage the trade, which hands down is the most important thing about trading. All right, now the trade I want to talk about today then is Etsy. Let me pull up a chart of Etsy. They came out with earnings and they were not good. I don't know if you've been watching McDonald's and Yum Brands, but the low income spending has dropped. And so you can see Etsy's earnings were not good. And the stock yesterday was here, and you can see the pre-market opening price is right around 59. So that's way down here. Now, where I'd like to put my line in the sand is right up here at 73. Now, I don't know if we're going to get enough money there. We might. And the reason, but we're going to fish here, and we may even drop the line in the sand based on what happens at the open. But I'm going to try to nab 10 cents on a $1 spread where the line in the sand is above this, or right at this blue line here. Let's zoom in a little bit so you can see, maybe more like so I can see. Here's the 200-day average. It's a mega strong support resistance level. In this case, a resistance level, and we're going to sell on the other side. So the stock's going to open up way down off the chart at 59. If we can get 10% there, then man, that is a mega high probability profit trade. Short-term, high probability profits. That's what this game is all about. So we'll sell there. The stock's going to be down here at 60 or so. It'll have to get back up above 65, which was support and now resistance. We got resistance here as well at 68.50, 69, 70 is super strong resistance. And that's as low as I'll go here. Let me draw that line for you. We got a lot of snipers that are in my community, and I know that they like to get a little more aggressive. So I'm going to start at 73, and then I'll see how we go. We'll get filled or not. And if we don't, after about 5 minutes or so, I'll let it breathe, and then we may drop our line in the sand as low as 70, but no lower than 70 on this stock. Let me give you another distinction. So the stock was here yesterday, and then they came out with crappy earnings. Is the stock going to go higher than it was yesterday? Doubt it. Why would it? Our earnings are terrible. We're lowering our revenue expectations. Consumers, low-income consumers aren't buying as much. We know that from McDonald's and Yum. Let me show you those two charts real quick here as well. But that's the crack that the Fed likes, is that people aren't even buying McDonald's as much. They did raise their prices because of inflation. All that stuff's in place. McDonald's tanked on the news and then bounced in the day, and currently is going sideways. So McDonald's is under a lot of pressure. You can see the 50-day average crossing below the 200. They call that the death cross in trading. Yesterday, Yum, which is Pizza Hut, Kentucky Fried Chicken, and Olive Garden, look what happened to Yum yesterday. That's yummy. Lowered future guidance, missed their expectations. So you could consider selling up here as well. All right, I've got 5 minutes. So let's tee this trade up. Here's the trade I have in mind to open this morning, and that is on Etsy. So what I'm going to do here in a minute is sell to open the Etsy May 17 73 call, and then buy the next higher strike call, same stock, same expiration, of course. We're going to buy the 74. We're going to try to get at least 10 cents. And that order is already teed up here. And this is what it looks like in Thinkorswim. So I'm going to sell the 73 call. I'm going to buy the 74 call, May 17. I'm going to do one of them, and I'm going to try to get 10 cents. Looks like we'll probably get it. And if not, then I'm going to go ahead and lower the line in the sand. So we're just going to do some live trading here like we do every Thursday. Now, let's talk about position sizing, because I don't talk about that every time. But this is right in the guidebook, right? So there's some formulas, some basic math. And the way you can calculate your return on investment potential is to determine the width of the spread. All right. So in this case, the width of the spread is $1. 74 minus 73, $1. The width of the spread is $1. And if I can get 10 cents, if I can sell that $1 spread for 10 cents, then my risk in the trade is the width of the spread minus the credit, which is 90 cents. All right. Now, when you trade an option and you sell it for 10 cents, you get $10 in your account. You also carry $90 of risk. You know, is anybody going to get rich making $10 on a trade? No. So position sizing is a really, it's the cardinal rule of trade management in this game we play, especially options. And so one of the rules of thumb that most use is don't put more than 2 to 3% of your total portfolio value into any given trade. All right. So here, 2%, let's say we had a $10,000 account, then 2% would represent $500. All right. Now, so what I'm going to do now is do 5 contracts, right? 5 contracts times $90 of risk per contract. 90 cents times 100 shares controlled is $90. 5 times 90 is my max risk of $450, and that is below my max position size of $500. Okay, so that's in the guidebook. You just heard me say it. I really want you to get that guidebook. Come and trade with me. I've got a community of traders that are just knocking the cover, not even knocking the cover on the ball. They're off the ball. They're getting on base and getting on base and getting on base and generating meaningful profits in their accounts. That's what we want for you here on the Hub channel. So please do grab that guidebook, which is right in the link below. All right, so now what I'll do is go back to our trade here, and I'm going to make this 5. All right, so I'm going to do 5 contracts. If we get filled, that'll put $50 in our account, not $10. All right, we've got, let's see, the markets are opening in about 1 minute. Let me go ahead and confirm and send. And then I go over to monitor here, and you're going to see there's the working order. Yesterday, this spread was worth 40 cents. We could maybe catch it at 10 cents. Again, the reason it won't be worth 40 cents is because Etsy has fallen out of bed and is trading. Will open here in just a minute at 58.57, which is right down here. All right, so if I can get 10 cents, I'll take it. And here's the thing. If you can put these on before the market opens, you have a much better chance of getting 10 cents in the first 5-10 minutes than you do 30 minutes later. In the morning, when the bad news happens or the good news happens, what's called implied volatility, let's call it expense of the options, is higher in the morning. It's a veritable feeding frenzy. I want some Etsy options. Market makers are filling orders. It's just kind of like that. You could, if you picture a bunch of fish, and we're off. If you picture a school of fish that are feeding, I've heard you can drop a hook in the water with no bait and catch a fish. All right, so the market's open now. Etsy's open, and it's just open right down there. Now, we're probably going to have to lower this, but let's see. I'll go back to monitor. And what you'll notice here is already they've set the price at 2 cents. That's not enough. The minimum credit on a trade that we would accept is 10% of the spread width. So that's 10 cents. That's where I got that. Now, it doesn't look like we're going to get that. So now what I'll do is lower this line in the sand here to 70. I love 70. It's a round number. It's a multiple of 10. Let's go to 70 now, and let's see what we can get at 70. So all I'm going to do here is cancel, replace this order. And let's set this line in the sand all the way down to 70. I think that's a good place to sell. And that's showing 9 cents. Let's try to get our 10 cents. It's showing 8 cents. I'm going to put this in the water, and that's it. I'm going to let this trade come to me. Let me send it and tell you what I'm talking about here. So you got to kind of move a little fast here. I'm trying to slow down as much as I can, but I'm not good at that. And so let's cancel this order. I thought I hit cancel replace. Didn't work. Okay. So here's the order I have on now. See, it's gone. Missed it. All right. Now, do we want to go any lower? I don't think so. I don't think so. Look, the stock's already starting to rise a bit. It's bouncing a bit. Good. Go ahead and bounce, because as the stock starts rising towards the short strike we want, our 70 line in the sand, the value of that spread increases, and it just filled. We just got it. All right. So that's the game. We're in on Etsy, and now we're in on Etsy. Let me tell you the most important part. The most important part. Yeah, you want to collect your profits. Yeah, we'll talk about that in a minute. But before we even think about that, let me show you the new trade we just did. Selling the 70, buying the 71, and 10 cents. The stop loss on this now is, let me illustrate it for you here in the chart. The way we want to do this is if Etsy does, and for some reason, close above 70, then we want out. Then, it's broken our line in the sand. So we don't do anything now. We're in the trade as long as Etsy just hangs out below this point, meaning it can go sideways. We're going to make our money. It can drop. We're going to make our money. It can even rise all the way up to 70, which would have to go through 65 and 67 and all these different support resistance levels that you can see here as I move my line. There's just really a lot of resistance to keep the stock from getting hit. So that's the stop loss. There's an adage in trading. It's a really good one. Manage your risk and let the profits happen as a consequence. Manage your risk and let the winners take care of themselves is another way to say that. So in order to keep our win rate high and our losses contained, we want to say, all right, well, I'm going to manage risk. My risk management is very discreet. Exit the trade if the stock closes above, in our case now, 70. Simple. And then put a GTC order in to buy the spread back for 10% of the original credit. And that will just take your trade off for a profit. And so really, once you're in the trade, all you have to worry about is Etsy above 70? Nope, do nothing. Is Etsy above 70? Nope, do nothing. Only if Etsy closes above the short call, exit. And I'd like to suggest that you do that right at the close. All right, so check the trade 10 minutes before the close. If the stock is greater than 70, then close that spread down before the actual close. So on market close, right before market close, pull those off. All right, that's a good one, Ryan. There's plenty more. We're in earnings season. In fact, Ryan, do we have any student trades here we can look at for today?
Not seeing any quite yet. If y'all have any questions or anything like that, or you want Mike to look at some charts or something, please feel free to post that in the chat.
Yeah. Well, I tell you what, while we're looking, I'm going to give you a little trick here. Within CNBC, there's a lot of places to get this data, but you can find, if I can find it here, CNBC has stocks on the move, and you can get a nice list of stocks on the move. So right here, stocks making the biggest pre-market moves, and they come out with this every day. And again, we are in the thick of earnings season every day. Maybe not so much on Fridays and Mondays, but we'll get earnings every day for the most part. And you can see here a list of candidates here. Peloton climbed 15% after the fitness company announced CEO Barry McCarthy will step down while it seeks permanent CEO. Okay, that's bad. That's deemed as good news, but it's not the kind of news I like. I want to hear the best news for me is when a company either lifts or lowers future guidance. Why? Well, that has staying power for at least 3 months until the next earnings announcement. And I don't trade staff changes. I just don't do that. It's too risky, I think. Now, Qualcomm shares rose more than 5% after the chip maker on Wednesday posted 2.44 per share in adjusted, topping 2.32. So they actually did better on their EPS. The top end of the forecast for the current quarter was higher than street expectations. Now, what's really cool? There's so many of these here. Carvana spiked up 36% after posting first quarter revenue of 3.606 billion, and then they got an overweight rating by Morgan Stanley. So Carvana would be interesting to look at. Let's take a look here. Yeah, Carvana. Look at Carvana. Ba-boom! I think it's safe to say that analysts are really happy with their earnings announcement. The problem we have, though, is how close do we want to go? So I'll look at this chart here, and I'm going to do a max chart, and let's do a 3-year chart here. And so what I want to see here is long-term support and resistance. And so we could maybe do something at 100, but I don't see any recent support at 100. It's kind of like blue sky up here. Yeah, maybe 100. I would like 90. So here, there is this definitive line in the sand right there, right? I like 90, but I doubt. Let's look. I doubt that I could sell anything at 90 and get any money. Let's take a look here. Oh, wait, there's 10 cents. What? I got to grab this. I'm going to do 5 contracts selling the May 17, 90, 89 put spread, 14 cents mid. My God, I am shocked. Let's try for 14 cents. That is shocking. So we're going to fish a little bit. I put an order in. Here's what I did here. I'm selling the May 17, Carvana, CVNA is the symbol, selling the 90 put for May 17, buying the 89 underneath, shows 18 cents. I'm thinking that's a little bit of a crazy print. The natural price is a little bit less than that. Let's drop it to 10 cents. You might work this a little bit. I'm going to try to get a fill here before the close of the show. If I can get 10 cents, that's a really great trade. Let's see if they'll take 10 cents. But again, if you're doing this trade, step it down a cent at a time. All right, now they're not filling it, probably because of the fervor of option traders out there. So I'm going to let that sit there. I'm going to let that sit there, and if it gets filled, cool. If it doesn't, that's cool as well. All right, Ryan, there's plenty more. This is earnings season, and you can find these. I think we just got it. Yeah, we just got Carvana for 10 cents. That's the second one for today. My mouth is watering. I love this game. It's like, taking shots on these, just so many opportunities. And again, you can go to CNBC and get this list. There's other services I like as well. Barchart.com has pre-market gappers. And this will continue. This amount of opportunity will continue through the end of the month. So if there's ever a time to join us, Ryan, on this show, it's now. We get together every Thursday at 9:15 a.m. Eastern Time, New York time, on the Hub channel. So we hope if you're playing with us, we hope you're enjoying this streak. I just heard from Gerardo that Etsy just closed for a profit. So it's a fun game, and now's the time. So anyway, Ryan, have a good week, buddy, and we'll see you all next week, same time, same bat channel. Have a great week.